Hi guys and welcome back. Today I want to present you which in my opinion is the yield opportunity of the month. And I'm talking about Equation Protocol. It is a perpetual trading protocol that is also my sponsor. Yes, I know. Right now you will be thinking, just the other day you told us, don't believe to the lies of influencers. Is just another lie what you're saying today? Well, not guys. This is a platform that I'm using, even if I fully understand it. I fully agree with you when you say influencers are lying. And don't forget to check out that video because it's so important for you. If you want to do anything into DeFi, into cryptos, check out this video. I will leave also the link into the right corner here. But this is a platform and you will judge by yourself. As always, guys, I'm not suggesting you to use something blinded. I want you to dig into the matter, check out, build your own opinion, and after take any kind of decision because it's so important. In my opinion, and I'm using a equation protocol, something for myself, it is something that at the moment, it's probably the best opportunity outside. Why? Because right now everyone is talking just about airdrops, and that's something I don't understand. Guys, why are you after? You are so excited by an airdrop while you can have sure money where you can build a strategy and produce real yield for you. Yes, I understand the point. Having a gift for Christmas is so exciting, and having a whole year to dream about that, that's incredible. The kind of hormones and how you will be reacting to that, that's incredible. But at the same time, most of the times it will be delusional experience because the airdrop could be good, could be bad, and you don't know. It's just about uncertainty. I'm not saying to not follow airdrops, but use also something that can give you something for real, a strategy. And in this video, we'll tell you exactly how Equation gives you the opportunity to earn a lot. Because right now, if I'm recalling correctly, they are having an APR is about 20,000, 50,000, something like that of APR. Something is insane. And the APR is real because personally, I'm getting that. So it's not something that they are just printing on the screen and good and they are not giving to you. It's real. Obviously, as we will discover in a moment, it's not risk-free because in DeFi there is nothing that is risk-free, and you need to be aware of the limits, the risk, and take all the precautions. At the same time, the opportunity is real, and let's dig into it. Let me say before starting that this channel is about educational content and nothing has to be intended as financial advice. If you want to invest in anything super cool, super fun, but do always your own research and check the video that I told you before because that's so important. And if you want to know more about guides, strategies, airdrops, and so on, check out also our links, our weekly newsletter, Twitter, Discord, and whatever you find it useful. So let's start. First of all, the first thing that you need to know about Equation, it is like a GMX protocol that is using a much more efficient model of managing the liquidity. I will explain to you just in a moment how it works. Before doing anything, let me say that yes, they have a 0% campaign on Bitcoin, so you can trade Bitcoin for without paying any fee, except obviously the funding rate. That's another story. But if you wanna benefit from that, you have to use some referral code. Some code is giving you that benefit. I will leave the link into the description below and also into the comment section. Remember that you have to do confirm and you will be able to bind your account in order to have this benefit. As you can see, there is 50% discount on all the pairs plus 0 trading fees on Bitcoin until the 1st of April, plus a bonus on the already insane APR that they have that I will show you just in a moment. If you're interested, do that. That's, in my opinion, a good opportunity. But let's discover how it works, Equation Protocol. So as I was telling you, Equation Protocol is born with the idea of making more efficient the GMX model. As you know, GMX works that there are liquidity providers, users like me, you, and whoever, who are providing liquidity to the platform. This liquidity will be used as a counterparty for traders. So a win by the trader will be the loss for the liquidity provider. At the same time, there is another thing that has been added by Equation is what if we are able to use liquidity that has been provided with leverage. So let's say they have just $1,000 on GMX. It means that the traders can open a position of maximum $1,000 because there is not enough liquidity as a counterparty. with equation, even if there is just 1,000 of dollar of liquidity, you can trade with up to 200,000 because that's the maximum of leverage can be used when you are providing liquidity. I will show you in a moment also how to earn money by providing liquidity because that's something that is also interesting. But the first thing that is important for you to understand is that equation means making more efficient the GMX model in terms of liquidity provided. Why? Because with less liquidity, it's possible to trade much more, so the capital efficiency is much higher. What I have added to this model is, okay guys, in order to incentivize trading, let's distribute our token not with an airdrop like has been done by Evo, HyperLiquid, Drift. These are all protocols that are pair protocols, so close to what Equation is doing, that instead of using a liquidity mining as Equation is doing, they are using an airdrop. The big difference is that if an airdrop is giving you about free 20% to 10% of the supply, for example, we have seen just by Evo, they are distributing 3% as an airdrop. Equation is distributing the whole supply through rewards by trading or providing liquidity. So you can think about that as an airdrop that is distributing 100% the supply to the community. So that's pretty interesting. And that's also the reason why when you check into the earn feature, you will see APRs that are simply insane. Here you can see, we can even zoom. It's about 20,000%. If we go on other pairs, it could be 25, 16,000, and so on. Why and how it is possible? Well, as always, you can see here there is an amount of tokens that are distributed each day. These tokens are going to the people who are trading from one side, providing liquidity as exactly as it's happening with GMX, or are providing liquidity for the pair of equation token on the DEX. In this case, it's Uniswap. You can also, in this case, just go into Uniswap, add liquidity, and stake it here, and you will be able to earn an APR that in that case is about 800%. Pretty high either way. Okay, but let's see how to use for real and how to earn that APR. So first of all, if you want to earn by trading, you have simply to trade. As you can see, the interface is pretty close to what we are used to have on GMX. What you can do is long and short the asset. All you need is USDT. You can choose the leverage according to which asset you wanna trade. The leverage could be higher. For example, on Bitcoin, the leverage is up to 200x. On other assets, the leverage is, in this case, it's up to 20x. It's up to you which leverage you wanna use. As always, guys, I prefer to use a lower leverage or whatever is the leverage that you are using. What is important is that you have a strategy. It's not just about opening a position just because there is an incentive. That's something that I will never recommend you. What I recommend you is try it out. The incentive is high. Instead of trading without having any kind of reward, let's trade and receiving something in exchange. Not to a pin, but with a part, why not? So just confirm transaction and you will be able to have your position open. Here you will find all the positions and you will have the opportunity to set up take profits and stop losses. One important thing that I highly encourage to do if you're using this platform is set a stop loss. Why? The stop loss, even if it's close to your liquidation price, will avoid you to pay the liquidation fee. So it's always better to have a stop loss instead of being liquidated. Why? Because the moment when you are being liquidated, you will lose your whole margin. So let's suppose that you open a position of $1,000 using 20x of leverage. It means that your collateral was $50. If you reach the liquidation price, you will lose all the $50. Instead, if you are setting a stop loss, you will recover your $50 plus the amount that you haven't lost in whole. So that's important. Set a stop loss. Please do that. Do it for me, but do it for yourself at first. Now that we have understood how to trade, let's try to understand how to earn a yield for real. Yes, we know. You trade, you earn. But how much for real? Is it really 20,000%? How is it possible they are giving us so much money? And there are three reasons. First of all, we are still talking about a protocol that is pretty young. So there are not so many people, even if we talk about something that already reached the 8th position into the global ranking by volume. And that's pretty insane. As you can see, the first one is GMX, but Equation is over here and had already something about 13 billion of volume. So pretty a lot. But even so, compared to the amount of the incentive, there are not so many traders. And obviously, the more traders will come to the platform, the lower will be the APR. So right now, you have an advantage if you're joining if you're trading right now, because right now the APRs will be much better than in just 6 months. On the other side, there is a second reason. Well, this APR is about if you are staking your tokens, because here, as you can see, there is a claim all. When you are accruing rewards, you will have to claim them. And obviously, in the moment when you claim, the interface will tell you, do you want to stake them for 1 year? Do you want to have them immediately for in 6 months, 3 months, and so on? You can obviously have them all immediately, but you will have to leave on the table 90% of the reward. So instead of having, for example, 20,000 of APR, it's like having 2,000% of APR. That's still pretty a lot. Obviously, it depends what you want to do. Personally, that's what I'm doing, but I'm not suggesting you to follow what I'm doing. It's just what I'm doing. I'm staking them for a whole year or 6 months. Why? Simply because I still see a project that has a low market cap. At this price, the current market cap is about 1 to 2 million, so still really low. And I believe it in a bull run, as we hope, because obviously all the hypotheses are working if Bitcoin will keep growing into the next 12, 18 months, and that's my bet. I believe that 2025 will still be a good year for crypto. So having the unlocked time for February, March, or April 2025, I'm perfectly fine. I believe that the price could be even higher, and that's the beauty. If the price goes higher, it means that instead of having this APR, let's suppose the price will go to $30 instead of the actual 15. Well, it's like having the APR is double. So that's the bet. That's my bet, guys. Set your own strategy and follow your own rules, because it's up to you. Because in a year, it's also possible the platform will be dead. We don't know that. So it's just my personal choice. That's my bet. I'm taking the risk, and I'm taking also the possible gain if there will be. So if you're staking for a whole year, you will get whole. If you're staking for 6 months, you will get half. If you're staking for just 3 months, you will have 25%. If you're staking just for 0 time, so you're claiming them all right now, you will have just 10% of them, so slash of 90%. That's also a nice way to bar tokens. Another thing that you have to remember is that the APR is maximized if you are opening and closing the position each day. And that's something that, for example, considering how much is the fees right now on Bitcoin, I suggest you close each 24 hours, open and close the same position, because at least you will be able to maximize your APR. My suggestion, but I think it's pretty something that you can follow. And also the APR that you are seeing is with the maximum leverage. With a lower leverage, obviously the APR is lower. You can even think to use a hedge strategy, opening a long and short position just to get the yield. It's up to you. Be aware that if you're using that, you have to set a stop loss, a take profit that are same in order to have the positions that are closing at the same time. Be aware it's also possible to have some kind of spread. So be aware of the risk, because it's not risk free. Again, guys, there is not an optimal strategy for everyone. There is your strategy, and that's the one you have to follow. What I can tell you is that why to trade on a platform that is giving you zero, or it's even make you pay fees when you can use something that is paying you to use the platform. I would go for something that is paying me. Obviously, I will not use it as my solo platform, and I will never put all of my money in. Yes, the platform has been audited, and if you want to check the audit, you can use it here, this link over here. But at the same time, we all know that being audited doesn't mean 100% security, so be aware of that. I have been talking with the team many times, and I trust them, but always, we are still talking about a market that is so volatile, it can change so fast. So don't be sure 100% that everything will be smooth and you will never lose your money. It's still a possibility. What I'm doing is I'm using a part of my money just to trade here, because the APR is something that I like it, but it's up to you what you want to do. Let's go to how to provide liquidity, because as I was suggesting you before, well, it's pretty interesting. Also, in this case, you can earn a lot. As you can see, the APR is about 1000% and even more in certain case. How it works? You have simply to click add liquidity. There is a disclaimer, and this disclaimer is really important, guys. Remember, if the trader wins, you are losing. That's the reality. As simple as that. Obviously, you are getting exchange also the fees, the funding rate, and so on. So you have some kind of hedge, but it's not 100%. So what they are suggesting is, guys, use the API, because an API is a system that is allowing you to follow exactly how your liquidity is used, and you can hedge one by one the positions that the system equation is opening. Personally speaking, if you want to use the platform with leverage, with a high leverage, it's doable, and the APR is insanely juicy. But at the same time, I wouldn't do that if you are not using a bot or a system that is integrating the API of equation and is automating everything. While on the other side, what you can still do is providing liquidity with much less leverage in order to have more time to react and hedge your position, manage your liquidity, even manually. Either way, guys, that's something that is possible to be done. Remember, guys, using leverage is always something that is exposing you to a higher risk. I want to add one thing, is not that if you're using 200x leverage that you will be liquidated like with trading. It's not like that. Simply because the system is not using your whole liquidity. Usually, as you can see also, balance rate is how much is used. The system is using just a minimum percentage. So the real exposure will be not 1-to-1, but with a much lower leverage. So much more manageable. Plus, if the level of usage is going up, also the funding rate will go up and you will earn more. So there is some kind of edge automatically produced by the platform, but it's not enough. If you are not hedging your position, you have to be aware that you are exposed to risk. You can also say, I don't care. I'm just putting a minimum amount. I will use the leverage and I will see how it goes, and I will be rewarded through the APR. Yes, that's fine, but that's a bet and that's a risk. So guys, do as you want according to your preferences, but be aware of the risk. From one side, the ones that we have been talking about previously, and on the other side, that providing liquidity with leverage has its own risk. Okay, guys, let me know what do you think about the equation. Personally, I love it, and I don't understand why there are not enough users that are using it. But it's just my opinion. Maybe I will be wrong, and maybe in the past equation will not produce me anything. I don't know. I still believe that it's worth it, but let's see how it will go into the future. Let me know your opinion. Let me know into the comment section below, and don't forget, if you want to use it, bind your link using this link that will leave in the description below and also into the comment section, because that's the way to get the discount on fees and maximize your yield. Guys, thank you for following me, and I will see you soon in another video. Bye, guys.